Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. Gold market right now is even interesting than the Forex market. On the Forex market we just see how our trading plan has started to work, is starting to work, since euro right now shows the significant drop. But here, as you can see, this was really a lot of uncertainty that we have discussed in our weekly research, because at the first glance we see that market shows not bad upward directions, thrusting candles exist. This market has passed through the significant resistance around 12-15 area. It has moved above the monthly pivot resistance one, but at the same time we see some warning moments. Particularly speaking, we do not see any inflows from the investors' money. Even more, as we have pointed in our today's daily update, the SPDR fund has lost approximately the 5 tons outflow on Monday, and every time that was happened already for the 3 or 4 times when we have seen previously the rallies on the gold market that were not supported by the real inflow in the SPDR funds. Sooner or later these rallies have been doomed, and after that the market shows really miserable plunge down. And right now the absence of the inflows in the SPDR fund makes me worry on the perspective of this upward direction. That's why right now we have to even more closer watch for current behavior on the gold market. As we said in our weekly research, here the major concern is since market has met here the overbought right after the breakout, it makes this breakout really fragile, because overbought will press on the market to show the retracement, while to keep the bullish sentiment here and the bullish trend, market should not return back down inside of this consolidation or horizon consolidation, as you would like to draw it. So any sign that market will drop low and move below and return right back down in this rectangle will significantly increase chance on the downward direction, and that really could become the bullish trap, as it specified by the Jack Schwager in his classical book on the technical analysis. It's just classical shape, as you can see, flag, upward breakout, return right back down will create the bullish trap that leads to the opposite breakout of this pattern. That's the first warning factor. The second warning factor is that, as you can see on the across the boards, as you can see right now, the dollar is appreciating, and you can see the drop on the commodities, on the crude oil, and every currency is dropping. The yields on US bonds have shown the significant growth, and it makes more attractive the bonds and the prices on the gold market. All investors expect the protocol of the Fed meeting on Wednesday, and right now some bankers and the governors of the federal banks in the United States makes the hints on that even Fed could rise rates in June if this we will see that supportive development of the economy. So right now that's why the attention from the investors to the protocols of the meeting really significant, and tomorrow when the protocols will be released, minutes will be released, that could really shake the markets across the board. That's why the gold position in the current circumstances doesn't look really stable and flawless. So I think that upward action looks really fragile, and personally I do not want to take the long position right now, as from the technical point of view, as from the fundamental point of view. For those of you guys who have taken the short position, according to our analysis that we have prepared on the weekly research, and take a look at the 4-hour time frame chart, you see our analysis specified that you could take the short position with the stop above the 1618 extension of this butterfly. I did not have it on this chart, but it was somewhere in this area, and we said that this probably will be strong resistance, the market will respect it by some drop. and you can see that's really happening right now. So you could move your stop to the break-even already and protect your position with the break-even stop loss. And here, guys, approximately the same picture. So we see that when this stands the upper border of this consolidation, you can see this flag, okay, we see also that this will be weekly pivot point, and what's more important is the 1205 1208 confluence support. That's really strong support area, and if the market is really bullish, it should not return right back down. It could retest this line, that will be normal, since market at ever bottom on the daily time frame chart. It could retest here, flirting here around the weekly pivot point, but it should not break it down. If it will happen, that will be very bearish. That's why I personally do not want to take the long position here, and better to wait with taking any longs. That's our expectation on the gold market. So for those of you who take into short, you could keep it, move your stop to the break-even, and watch what will happen here. That will be the minimum target that market probably should reach. For those of you who would like to take the long position, I think that it's not the time yet going long in the gold market. SPDR fund shows outflows. Data is not supportive for the gold market. Gold market stands under pressure right now, and market at overbought from the technical point of view. That's absolutely not the moment, not the right moment where we should think about the taking any long position. Besides, investors in Europe expect a solution on the Greece conversation when they trying to adapt the program, the cash with the exchange to reforms, and many investors suppose that this program probably will be accepted and will be approved on the meeting in Riga on 21st and 22nd of May. So that's really big hopes right now stands upon this agreement from the Greece, and if this agreement still finally will be reached, that could press the coal market even more significant. So I think that intraday scalp shorts position absolutely possible, but not taking the long position right now. It's not currently. We think that's not the right moment by far for taking any longs.